Awesome. Hi there. How we doing? Okay, wow. So has this been quite a week? And I just, it's funny because I just like, oh, I want to go. I'll go watch other YouTubers, and I'm just like, come on, really? And I have a lot of respect for all these YouTubers. They're doing more things than me, and so once again, I defer to them for how to make money in real estate, how to make money in businesses, all this stuff. But I just see the stuff where it's like, really, you're like talking about how this is a horrible week in the stock market, and talking about this, that, and the other thing, and like how they bought this and bought that, and it's like I just see so many absolutely undisciplined methodologies going on out there. It's just like, you're kidding me. And the problem is that your day's gonna come. Like, if you're messing with these high beta stuff and you're like, oh, this company's CCIV, whatever, Churchill, whatever, oh, this is gonna be great. Well, yeah, this thing's gonna be great in 10 years, but you're like overpaying now for it. The problem is, this is the problem that we have in the market right now, is that like you're paying for something that might happen 5 years from now, and it may be a really good solid company's 5 years from now. Well, you're paying for it now. You can't do. I mean, you can do that all you want, but I've lived through this many times where it's like, dude, you're kidding me, right? You're like, okay, well, this is a really good company. It's like, okay, fine. I mean, if you're doing that stuff, here's what I would say. If you're doing that stuff, what I would do is I would try to do a curve fitting thing. And what I would try to do is I would go back and watch Amazon. Goes back a long way. They're back into the tech bust in the 2000s and all that stuff. And yes, they were a real company. And yes, the question then becomes, when do you buy them, right? And I think if you go back to 2000, you'll find plenty of places where you could have bought them and you could have overpaid, where it would have taken you a decade or more to get out from underneath it. And so that's really the point. At all times and in all places, when it comes to the stock market, you have to understand valuation. You have to do one of two things. You can understand valuation, and you have to understand you're paying for something that you hope will happen. Okay? And you have to mark it down with a probability. And what you will find is that the market is often taking something like, oh, we think this is going to happen, and they mark it up with like 100% probability. Oh, this is definitely going to happen. And it's like, well, no, it doesn't happen. And so that's all I'm saying, is you have to kind of take that into account. We have people out there betting on these companies that are making no money, and you're all out there. I get it. I get it. You're like, oh, well, no, it's different this time. I don't know, because Weeble and Robinhood, there was no period of time more than a year ago, right? Nothing ever happened before a year ago in the stock market, so I don't need to look at a chart going back that far. I mean, really? I mean, you're kidding me, right? I mean, it's just so silly. And I find myself just so frustrated just watching this stuff. And it's like, I've been here before, and it's funny because I come from, a time where, I'm an electrical engineer, and back in the 90s, it was like people were, I mean, you're not talking about just trading stocks. You're like, oh, I'm going to go make a decision about what company I'm going to go work for based on their stock or their potential for their stock. And that was a huge thing. And I remember I was at this startup, and it was called Internet Machines. And this thing was like, I remember I had 50,000 shares of this company. And they split it, blah, blah, blah. They didn't really dilute me there. But it was kind of funny. They were like, well, look, here's the deal. We're offering all the new people the same share of the company, which was like point something percent of the company. I mean, it's decent, right? And but the problem was that 50,000 shares was like, oh no, that wasn't enough. They're being offered 100,000 shares at other companies, and so they were just like they're losing competition, right? And so what did this company do? They're like, look, we're going to split the shares, and like you have the same ownership interest that you had before after the split, but now you have 100,000, so that way they can offer 100,000 shares to new people coming in. I mean, that's the game that they were playing, and that's the game that's being played now. So you Robin Hooders out there who, I mean, I'm sorry, but you guys are doing like nothing but, I don't know, if you're living in your parents' basement doing freaking nothing. I mean, add another dimension. In the 90s, we were like, hey, look, we went and got a degree in engineering, whether it be software, hardware, the 50 different like areas of speciality and software, firmware, hardware, and we're like all gaming, trying to figure out like where are we gonna go, because like at that time it was like Broadcom came out and those guys, I didn't go there, and those guys, yeah, they made a killing. Freaking, it's funny the tension between people. You have people that are like managers that are like dealing with stuff, and like they have a really nice house, and then an engineer that kind of like good engineer but really didn't have to deal with all the crap, has a bigger house, and they're like, damn, just like what the hell. I mean, you have to understand there's a certain amount of pain that has to go with everything. Like that's what it is. Like if you're gonna get a promotion, it's like you gotta appreciate the pain that they're gonna put you through for that. And it's so funny, and that's what was happening in the late 90s. It was like, and it's funny because I'm in the San Diego